Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening. Ira Epstein of Linn & Associates with your financial market wrap-up. And this is for Wednesday, the 15th of November, 2017. We're at 5:35 p.m. So what that means is the Globex sessions on most of the markets have reopened. Not in the grains yet, and not in the soft commodities. They'll have an S on it, and this is a pre-opening. That's what the P's are basically meaning. But the rest of the markets are open. So we're into Thursday trade already. If you look at the charts, like if you were looking at the gold and you were wondering, how come I've got a gold dated November 16th and yet the ETFs were the 15th? Well, the ETFs don't trade until tomorrow. So that's the reason. But the futures are already open. Now, what's the events of the day? And let's understand what we're dealing with. This is tax bill haven. And what keeps happening is these bills are very fluid, especially the Senate bill. We're not even hearing much on the House bill. The Senate bill is very fluid. We've had one senator, Senator Johnson, say he will not vote for the bill as it is. We have not heard yet from Susan Collins. She's saying a lot of negative things. She hasn't said she won't vote for it. And John McCain has said nothing. And I don't know who else is in that loop. Now, the way to look at it, if they don't reach agreement and can't get a vote, and they got to keep pushing this off, it's probably bearish for the stock market, bearish for the dollar index. That's what you're looking at. Get the votes through, and it looks like you're getting a tax bill that everybody can live with. My guess is it's going to pop the dollar and take some of the worry out of the stock market that it's been seeing. The gold market is just caught in between all this. It doesn't know if it should go up, down. If you're watching these swings, it's from the 1260 level to 1290, back and forth, and it's moving $10 at a clip. For a market that had no volatility, it's suddenly very volatile. On the energy sector, we are looking at lots of problems. First of all, if you read today the report, and my report tonight from my consultant people, we'll see that I talk about the fact that we've done now record oil production last week again. Eventually, the EIA is saying we might have pipeline problems getting the amount of oil that higher prices are going to bring up. How do you get it to the different areas? It costs about $3.50 a barrel, according to them, to get it from the Permian Basin to the Gulf. So gives you an idea of what's going on and the cost of these lines, and do we need more of them? Most certainly, if we're going to become a major player. But what we first have to deal with is the tax bills that we have in front of us. Now, the December S&P on a weekly area chart, we're down so far for this week 17 points. Okay, it's down, and we're not used to saying it's down. It's still far away from the 18-week moving average of closes at 2508. The bias is still up there. That's not the case on the daily area chart of closes. Here you've gone from 2591, and right now you're at 2562.50, the lowest low that we've seen recently. So the market's got almost a 30-point break built into it at this point in time. Excuse me. As I pointed out yesterday, each one of these spikes has in the past been met by the market coming up and literally very quickly making a new high. We haven't done that yet, but remember, we got to look back and see how it's going to look. We'll see if that ends up to be the case. When I take that chart, by the way, and I put on it the swing line study, you have a pattern of a higher high and a lower low. That is not a trend. Market's out of a trend at this point. I look to see where the bias is by looking to see where the moving averages are. And in this case, you're under the 18-day moving average of closes. The 100-day is here in the green. So you have a market with downside bias that is not trending. The Bollinger Band was hit on Wednesday. Market came down, hit it, and held the first test of it. And you can see that the market's been stopped at the upper band. What could be developing here is a market that starts spinning sideways as it builds either a top or a base to move even higher again. We'll have to wait and see, but right now that appears to be the case, and momentum in the market is down. That red line is not under 30. It's not in oversold territory. It is still pointing itself down. In the NASDAQ, prices eventually moved down and challenged today after it lost its embedded reading. Remember my theory, when you lose that reading, the odds are price is going to hit the 18-day average. It's done that. It did it all at one time. But you've now taken this market into the swing line in a downtrend. Prices have closed over the 18-day average, so the bias is up, and you leave an embedded bullish reading, and it becomes instantly what? Overbought. So you typically on an overbought condition, the markets try to work sideways to lower. It doesn't mean it has to, but that's the norm. When you come to the December Dow Jones, you are in a market that is oversold. Number two, lower highs, lower lows, bearish. Number three, the market is hit now the lower Bollinger Bands, and it's developing very sideways action. I think this is the classic market that is telling you that the market wants news on these tax bills. And if it gets one set of news that the market considers friendly for the economy and so on, out of this base, you may break right out to the upside. You don't get any tax bill, and it's another failure, grander failure than before. We have nothing there, and the market probably, because it's built in, so much of the idea of a tax break, the economy moving, pulls back. I don't know where you're at right now other than to say take the name off the chart. You're in a downtrend in the Dow. You've hit support. Resistance is back at the 18-day average. But because you're so oversold, I wouldn't be surprised if the pros do nothing. The market that got you into this and told you the problem right away, and the question was, would it on its own be able to take the other markets down, or were they going to lift it back, was the Russell. It began here. And this market has worked its way. Now, as you know, the Dow, I just showed you how it's starting to narrow. Here's that narrowness. Now, eventually a market breaks out of that either to the up or downside by pushing on one of the Bollinger Bands. And this market's pushing on the lower band, as you can see, and taking the market down with it. Maybe it's going to the 100-day average. I mentioned that earlier in the week, and that number is 1442. It's about 20 points away. Now it's not so far. If the market clears 1474, it would break the downtrend but not start an uptrend, because no matter what you do, you got a lower and low day today. You are oversold in the market, and it is not yet trying to convert and locking in what we call that embedded reading. When we come to the VIX, okay, now you're back up on a close like you were here over the upper Bollinger Band. We know the history that as the market gets over that, what's been happening is it pulls back in fairly quick order. Maybe it won't this time. Just because it's done it before, it doesn't matter. In this case, though, what it has going for it, unlike the other spikes, you're in an uptrend. And I've also mentioned, let's take today off. The market came out of this sideways action, and it's trying to lift out of here. Increased volatility is coming into the market. That's how I'm reading this. You are in an area with a reading of 68 that is not yet overbought. The odds of staying over this Bollinger Band are not good. In the past, each time it's tried it, it's had some problems with it. We'll see. Okay, but you already know you're in a downtrend in stocks, so seeing that's not a surprise. Now, the bond market's trying to figure out, where am I in all this? The trend of the market is one of a, higher high, then a lower low, and you've rallied back up, overbought. You're staying over the 18-day average. In fact, you only stayed under it 2 days, so you're back over it. This is part of that flattening of the yield curve. As you look at the 10-year notes, you're in an uptrend. You got higher lows and higher highs. Again, these markets are watching this tax bill, trying to figure out where they're going to go. We still have a probability, if you go to the CME website, of about 90 to 92% of a rate hike according to the Eurodollar futures for December. So something you'd want to be watching. As you take a look at the December dollar index, bearish. Lower highs, lower lows. Again, this market's feeling the weight of no tax bill right now. It's also looking at great numbers in Germany. Europe is looking good. China a little bit quieter, but now you've hit your downside target of both the 100-day average and the lower Bollinger Band, and voila, you jump off of that 25, 30 points. So if you just take a look at what it did, that's where you'd expect support. Resistance is back up at the 18-day average. We'll see if the market can do anything with it. In the euro currency, flip-flop of what we were looking at. Let's go back to Tuesday. Remember, today's Wednesday. If you continue up because you're over the 100-day average, maybe you get to the upper Bollinger Band to find some resistance. Market goes there, finds it. Now on ways back down, maybe you find support at the 100-day average, and that's what we're doing in this market right now. Trend of the market up, but in overbought territory, support back at the 117 area. In the Aussie dollar, trend is down. Lower highs, lower lows, and what else? You built in now the embedded reading. So it's a combination here of the slowdown in China. It's a combination where the government there is not talking of raising interest rates so fast, and it's putting pressure on the currency, but it's hit a downside target, and I would not be surprised if pros were taking some money off the table. In the Japanese yen, the trend is up. You've got higher lows, higher highs. This began as people got nervous and they started buying notes. It got nervous with the stock market dropping off, and the safe haven currency, don't ask me why, it's the Japanese yen, and people have gone back to that traditional friend. But you're at the upper Bollinger Band, you're overbought. I don't know. That's all I could say. You know, I understand why it's up. In the crude oil versus WTI, you're maintaining about a $6 difference between the two, as you can see. According to the EIA report, and again, if you get my newsletter, you'd understand this tonight, that they think that through the early part of next year, we're going to stay in that general area. It's not what I think, and they give the reasons. Remember, the $3.50 a barrel move it takes to get from Permian Basin oil to the Gulf. They got 3.5 there. Then the natural difference in premium between the Brent and the WTI, and they think that $6 area is interesting. Well, I find it fascinating because that's where the 18-day moving average of closes is. When we get to the Brent, we've been in a downside correction. You have lost the embedded reading. Therefore, price and the 18-day average often make a run at each other, and that's exactly what you're in right now. The WTI is open already, and as you could see, it has fallen to that 18-day average, and now for 3 days, it's leaning on it as the market tries to figure out what is the next move. Momentum down. If you take out the $55 level, you could end up with lower highs, lower lows, under the 18-day average. Wouldn't surprise me then if the lower Bollinger Band could become in play. In other words, could we be looking at a near-term top in the crude is the big question. Also, there's talk in Russia that maybe they don't want to go along with the end of the meeting that's coming up at, I think it's November 30th for OPEC. Now they're balking that maybe that's too long of an extension on cuts. I don't know. Gasoline, lower highs, lower lows. Bearish, under the 18-day average, bearish. Momentum pointing down, bearish, all parts of that market. In the nat gas, you had this spike up off of that first cold weather blast. Now the market pulled back to the 18-day average 2 days in a row. We'll see if it hangs there a bit. It is overbought. The market is trying to figure out what next. It had an outside day down on Wednesday. Remember, we're already into Thursday's trade. So I've got lower highs and a lower low on that. But over the 18-day average, they fight each other and you sort of neutralize where you're at. Want to remind you all about our free offer to Modern Trader magazine. You get the magazine, you get Market Focus, which comes out every day. It is a $79 value. It is sent to your email box. And how do you get it? It's really simple. You're going to give us a call, 866-973-2077. This is the December issue. It covers not just futures, it covers ETFs. It's going to cover cryptocurrencies. That's what we're going to call that, right? We're going to talk, it's got the stock. What about the mining stocks? All the stories that you can see here. Here's Newport Mining. So If you're a gold bug, it's there. It's going to give you an idea here as to how you trade different patterns in the market. And then it's got a crude oil in it, which now I think is getting really exciting. And we'll see. Look at how apropos that is. Crude fundamentals bearish despite the noise. I don't know if that was a question mark or a statement that they made. But in any case, you get that. You get the daily publication because you want to keep up with the day-to-day. A magazine comes out once a month. And how do you get it? Call us. Go to our website. You can click up here or underneath us. It says, click here for Ira Epstein's free offers. I'm Ira. You have a good day.